Hello everybody and welcome to the CMC Markets Technical Insights video for the week of May 5th. My name is Toby Gennaro from Traded Precision, and we'll take a look at some of the higher time frame charts here on the S&P index for the US, and take a look and see where things might be headed here in short term to a little bit longer term. We'll be looking at the higher time frames here, the monthly, the weekly, and the daily, and trying to get a gauge for where things are. Obviously, you can see the high to low swings here, down to about 2185 was the low, and up around 3400 was the high. So I've just got a Fibonacci retracement drawn in there to look for basically some high level zones that we can start to think about. And we just had a recent touch up around that 62% level, just an incredible bounce off of the bottom here at 2185. Government stepped in, provisioned about $2.5 trillion, and that was basically the reaction that you saw off of that. In looking at this technically, I certainly am very wary of this area. The fact that we were almost up to about 3,000, literally only 400 points off the high. And literally the entire globe of commerce is virtually almost shut down. So there seems to be more bad news that's coming. Just the unemployment rates and the number of people unemployed just here in the States, I'm sure that resonates, around the globe, is phenomenal. It's the fastest drop we've ever seen. And so I can't think that the market here at, 2,800 or thereabouts is predicting that quick of a recovery. So I think this is just an over exaggeration of a rally based on all the money that the government is extending and pouring into small to medium business to help prevent and stave off more job losses. So in this zone right here, we got a nice rejection candle right off of that 62% tracement level. We've had basically 3 down candles back into this 2780 level. And I would, even if we did rally back up to 2960, which I don't think we'll do, I would suggest we'll probably end up very shortly down here at around 2600 would be my best guess. That's the 50% retracement, and then probably somewhere down around the 2450 level would probably be more of the 62% retracement level. And then I think I'm sensing here a retest of the 2180 level. I don't think is out of the question. I think even the 2100 level is even possible, putting in a new lower low. You just can't figure that all of the activity that's gone on in the last 2 months is really anything that's going to recover in a V type of format. I don't really see anyone saying that a lot. So I think the technicals here validate the fact that we're looking for a pullback off of this level. I was somewhere between looking at the 50% at 2830 to the 62% level at 2930, about a 100-point gap in there. And boy, the run-up was pretty strong. We kind of blew right through that in one day, but then the very next day came right back off of that. So we're still, we have made higher highs and higher lows in throughout here. The lower low break, that would give me a lot of confidence, would be 2725. If we can break down below that level, it might see a little bounce off of there. But if we can break down below that level, put in a lower high, and then roll over again, then I think a 2600 level or lower, even potentially 2200, is certainly in the cards for the equities markets. I think from what most folks are saying, I think a global recession is probably on the docket. We've had a pretty good run of about 10, 11 years, and it's really just a business contraction cycle that has to occur. It's healthy for the markets, it's healthy for the economy. Obviously, the virus isn't the way that we'd prefer to see that happening, but nonetheless, it's usually coincides with a number of other things. So we just have to work with what we have. But those are really some of the key levels that I'm looking at. Don't really want to be going long in this zone right here. I'd be interested when we get down there to be potentially maybe looking long and see how things look down around that 2200 level would be my best estimate on looking at the technicals here. So that's kind of how the markets look in terms of the technical analysis and the wide range of movements that we've seen in the markets. I'd probably see be looking for an increase in the VIX as things start to pull back, and that would be I think probably a fair estimate of where we can expect the markets to be in in the coming week, coming days, maybe the coming 2 weeks. So hope that technical analysis helps. Have a great rest of the week trading. Be careful out there. There is a lot of volatility, and certainly look forward to talking to you next time. Take care.